Right, hello everybody. Welcome to the Trend Signal podcast, and we're going to be looking at the trading week ahead between the 17th to the 21st of August. My name's Adrian Boothie. I'm the head of trading here at Trend Signal, and I'm joined as ever by our chief analyst and CEO, Jerry Miller. Hi, Jerry.
Hello, hi.
So what happens in these ones, the first time of listening, is we do run through of really what's about to happen. So what are the main events? What are the banana skins? What are the main stimulating events for the week ahead? They're going to be creating movement for traders over this summer period. So what I'm going to do is just bring up the economic calendar now. Those of you that are watching this on our website or on YouTube, and we'll have a bit of a run through of that and other events as well. But Jerry, while I do that, do you just want to kick us off already with, I guess, what don't we know yet?
Okay, yeah, well, we're right at the beginning of the week, and Monday, ironically, is the one day of the week that doesn't actually have any really high impact data. As you can see from the calendar, if you are actually on YouTube, you can see the calendar there. There's nothing really of note coming out on Monday. There are quite a few releases this week, mostly towards the end of the week, but we got a few central banks, certainly the US Central Bank and the Australian Central Bank, and all this PMI data. I can explain about that in a second, but it's really data that tells us how well or how badly the services and manufacturing sectors are doing in Europe, which includes obviously the UK. It will always include the UK, maybe not in the EU, but in Europe for sure. I'll kick off with today, and just to sort of start the ball rolling, and these events are not actually on the Forex calendar, and those are some of the macro events. We've got the dreaded Brexit trade negotiations. They're all kicking off again, Adrian, in Brussels. That's face to face, obviously. David Frost goes over to Brussels to start those negotiations again, and I really think, Adrian, the chances of any announcement is almost it's just so remote for now.
Yeah.
And the reason being, that's not the way the EU does it. They're very much the sort of the 11th hour negotiations, and they only really start negotiating hard when it approaches the end of negotiations. And I think that's one of the reasons why the UK government has made very clear that no matter what happens, we leave the EU we leave the EU properly on the 31st of December with or without a trade deal, and I think that's the only way to make sure that the EU does negotiate to a conclusion.
Yeah, it's weird, a year or three ago, wasn't it, when it's almost the negotiations happening through the media, and it just seemed a bit awkward, really. It's not how one negotiates things, is it? Openly like that.
Yeah.
You have to do it in a different way and with a firm stance, I guess. But there you go.
And it's made quite a bit easier to the extent that the UK government has got a significant majority in the House of Commons, which does make it ensures that it's got the right support and mandate to deal with the EU in the way that it does. So yeah. Other than that, we've also got the start of the Democratic National Convention. This was delayed from July, so that's the two parties in the US, the Republicans and Democrats. And the Democrats, well, the Republicans haven't had theirs, but they've had to delay it. But the Democrats have got their convention because they really need to officially nominate their candidate for their presidential election. And obviously, as we all know, it's going to be Joe Biden.
Sleepy Joe.
Sleepy Joe. Well, yeah, there you go. You see, Trump's had his effect on you. He keeps calling him Sleepy Joe. And the reason why sometimes referred to as Sleepy Joe, Joe Biden's been in politics, and he's been in Washington since the mid 70s. So he's got so much experience. Conversely, Trump, who's got virtually no experience prior to assuming the presidential office. I don't know. Trump probably thought it was a game show. I'm not sure what he thought it was, but I don't think he thought he was going to win it. But here we are in the run-up to the election, November the 3rd, and this is a 4-day convention. It used to be held, in a particular sort of setting, and it's been held in Milwaukee, but no one's going to be attending it, so it's all going to be held remotely. Just a few organisers will actually be attending in person, and then
how likely is it that that's really going to have much of an impact on the markets? I know we've talked in previous weeks that that there's an argument that Joe Biden winning would be bad for equities, perhaps.
Yeah.
But is it likely to have an impact in the short term on the dollar and on the stock market, do you think?
Well, it's a way of galvanizing the sort of foot soldiers. It really is the sort of the firing of the starting gun, as it were, for the Democratic Party. And it normally galvanizes them. I mean, could it have an effect on the stock market to the extent that, I don't know, we discussed this a couple of weeks ago. What happens in the 3 months leading up to a US presidential election, according to some research that one of the banks did that was reported in the FT, that if the market starts to drift and come off within the 3 months before an election, then the incumbent normally loses. And it's interesting, you can get the polling in detail. In fact, the BBC have got a US election tab, and on that you can scroll down, and there's a breakdown of how the polling's going, and Biden's 50 and Trump's 42%, which is quite a wide margin for now, which is, if that plays out in the election and he does manage to take some of the key states, the ones that are up for grabs, I think they refer to them as the battleground states, then Biden gets in. And yeah, you're right, that's not good for stocks typically. I know Biden has already talked about raising corporation tax.
Yeah, nobody likes that. Okay, so why don't we get back onto more normal economic matters. So what have we got this week then?
Okay, so first of all, Tuesday, we got the Reserve Bank of Australia minutes from the last policy meeting. So you can see that there. As you have, you can see it, the first one actually of the week that we're looking at anyway. I think it's going to be interesting to see to what extent the committee viewed the spike in infections in Victoria, because Australia had been doing quite well, but that may impact growth going forward. So it'll be interesting to see what they've got to say about that. Wednesday, we've got the OPEC JMMC meeting. That's really behind closed doors, but they do talk to the press, the candidates, and attendance, I should say, but any change in policy, I'm sure we're going to hear about pretty quickly. We got US crude inventories, so that's more of an effect on WTI, but the inventories have been going down of late, but we'll see. We know all about oil. I think that'll be in the shadow of the OPEC meeting, to be honest. And then we have one of the more interesting releases of the week, the FOMC minutes, Federal Open Market Committee minutes, detailed minutes, I think should underpin what Jay Powell, the chairman of the Federal Reserve, was saying at that meeting, the commitment to monitor and support the US recovery. Well, if he didn't say that, it could mean something. If he said the opposite, it really would be a bit curious. But dollar and US equities will be sensitive to any sign of a change in support, whether it's more support or less support, Adrian.
And it's definitely the case if you're a day trader, just to be a little bit aware of that particular time. Fine to trade after it, but to hold positions into that number, into that release, is aggressive, shall we say, and perhaps foolhardy. Time will tell. But there is a risk of slippage over such times, isn't there? But when you end up getting perhaps stopped out at a price you didn't want, could be quite a long way away from where you wanted to get out. So it can be an expensive time. That's for sure.
It's odd, isn't it? Because a lot of the economic releases that happen in the US normally come out at the beginning of the day. And anything that the Fed does, whether it's an interest rate decision or their minutes, comes out at 7 o'clock in the evening, which is 2 o'clock in the afternoon. And it does sometimes catch us Europeans out when we're trading or have been trading, and you suddenly get a big sort of spike or collapse in the markets. You've definitely got to keep an eye on that for sure.
I guess it gives them time to get a round of golf in the morning first, doesn't it, before releasing?
Yeah, or a long breakfast, whatever you want to call it. Thursday, we got the Philly Fed Manufacturing PMI. This stands for Philadelphia. It's quite a busy federal district in the US. It's got a lot of manufacturing in it. So it's quite interesting to see how the manufacturing PMI is going there. And we're forecasting, or economists are forecasting, a slight pullback there in manufacturing activity there. We then have later on the weekly initial employment claims, not to be confused with unemployment data. This is just for first-time claimants. It dipped below 1 million last week, for the first time for quite some time, and I guess will that be maintained? Was that an aberration? The market is on the lookout for signs that the economy could be slowing because of the increase in infections from June. So that's something we're on the lookout for. Friday, I'm just rattling through this now, Adrian, stop me if you need me to. Friday, we got the PMI data. It's broken down. You've got French and German, but let's just focus on the Eurozone ones as a whole. Flash data just means it's the first reading. They have two readings. They don't have all the data at hand when they produce the first reading, hence the reason why it's called flash. Manufacturing 52.7 versus 51.8. So still a pickup, but slightly less so. Services again unchanged really, 54.6 versus 54.7. And the one that looks quite interesting is the sterling, UK, with manufacturing and services numbers coming out as well. Half an hour later, manufacturing 54.0, 53.3 last, so sort of just maintaining the momentum there. But the services still really, really buoyant, and you'd expect that because the services got absolutely clobbered. Remember, the UK has suffered one of the biggest contractions out of any of the developed economies, largely because its reliance on consumer spending. And so with the collapse in the consumer spending, that's exactly what has happened. But there has been a significant rebound, and I note that Andy Haldane, the Bank of England chief economist, is predicting a record jump in GDP for Q3 when the numbers come about. So for him, he's definitely continues to support his own theory that we've got a V-shaped recovery.
Well, I hope so. Okay, and let's finish it off very quickly with there's a few US earnings still to come out. I mean, a lot of the big ones have come and gone, haven't they? But we've got a few more. Jerry, should we quickly skittle through those?
Yeah, we have. We're right at the tail end of the Q2 earnings season. We've got Walmart, remember the owner of Asda, one of the biggest US retailers that have struggled obviously because of the online issues. I still think it has got Asda actually. Target Group as another one, and also that e-commerce giant Alibaba. Everyone sort of says, oh, but hang on a second, that's Chinese, isn't it? It is, but it's actually listed in New York, so that's the reason why we're looking forward to seeing those results. Home Depot, or Home Depot as the Americans call it, Kohl's, the department store, and then Estee Lauder. So yeah, they tend to sort of group these together. You get all the banks coming out the same week. Well, it's the turn of the retailers this week. So yeah, be interesting to see how well they've recovered. I suspect they've done pretty well.
Good. Well, I think that's pretty much it, Jerry. So have a great week's trading. We'll be back with you next week as ever. But in the meantime, if you're stuck for something to do, the weather's getting a bit rubbish this week, isn't it? So why don't you come along to one of our live trading events? We're running 3 events this week, and we'd love to see you online. You can participate, you can ask questions, and hopefully you can learn how to play some better trades as well, because we're going to be teaching one of our favorite trading strategies. It's one of our foundation strategies, and how we get our new students up and running and trading and getting some great opportunities away on the FX index and commodity markets. So if you'd like to come along and book a free place on one of these live events, please go to our website, or a short link, I should say, bit.ly, so bit.ly/learnts. So bit.ly/learnts. But otherwise, for myself and Jerry, have a great week's trading, and we look forward to seeing you online again soon enough. Bye-bye for now.